Good morning. Welcome to the ESS Finance Subcommittee meeting on August 12, 2024. We sent out the agenda. We are going to move up the 2023 audit report before the financial reports because Robert needs to get to another meeting. So I don't think we need an approval of that change. We'll just go ahead and start with the summary of the subcommittee actions, the minutes. Hopefully everyone had a chance to review them. Does anyone have any questions or comments? If not, I would take a motion for approval, and I will go ahead and make the motion. Stacy, if I have a second.
This is Mel. I can second.
Thank you, Mel. It's moved and seconded. All in favor say aye. Aye.
Aye.
Opposed, same sign. Motion carries. Thank you, guys. We'll go ahead and go with the audit report 2023 for Robert and Phil. Welcome, Amy. Thank you.
All right, I suppose that's my cue. Just a quick introduction here for those of you who are new to the committee. My name is Robert Enders. I'm a partner with Denman CPAs here in West Des Moines. Denman's had the privilege of doing your audit for a number of years now. We were on site, I believe, in April doing our field work, and we do have the independent auditor's report to review with you this morning. So the document you can see on the screen in front of you is what we call our governance letter. This is a letter we issue, our profession issues with every single audit. And I joke, it's kind of our dirty laundry letter. This is what we want the governance looking at to identify concerns, risks, areas that we felt really warranted your attention. And hopefully during your time as members of governance, you never have to read an exciting governance letter. We don't like issuing exciting governance letters. I'm happy to say that today you are not going to read a very exciting governance letter. This is a very dull, boring letter because we don't have any of those dirty laundry items that we need to make you aware of. But just a couple items in here that our professional standards do think it's worth us spending just a minute talking about. There are no new accounting policies this year, so the standards and practices that have historically been used when you look at these financial statements in the past are the same practices we're using this year as well. With all financial statements, there are estimates involved that management has to put on those financial statements. Management's making estimates about accounts and balances and transactions. We do evaluate management's estimates to make sure that they are reasonable and appropriate in the circumstances. We do believe management's estimates are indeed reasonable. During the course of our work, we will occasionally make adjustments and propose corrections to the financial statements. That's very common, very much part of our work. We had a couple of those adjustments this year. They are, again, very normal adjustments, none that we are particularly concerned about. So you can have a fair bit of reliance on those internal financial statements you are seeing month to month because we're not making major adjustments to them at the end of the audit. The most important probably thing I'm going to say throughout the entirety of our little presentation here, if you scroll back up just a smidge, we have a couple of paragraphs regarding disagreements with management and difficulties encountered in performing the audit. They're broken up there between the corrected and uncorrected misstatements in the middle. I'm happy to say that we had neither any disagreements with management nor difficulties in performing the audit. Phil and Lisa and Samantha and the team have been fantastic to work with. They've taken good care of us, and the audit went as smooth as it ever has this past year, which is a testament to the hard work that the staff are doing to make sure the audit goes smoothly. So if we can jump then to the financial statements themselves, which I believe probably is the very next, here we go. So here we have the actually audited financial statements. I'll move you down to the independent auditor's report, which will begin on page 3. This 2 or 3 page letter kind of lays out the results of the audit here very briefly. Just a couple reminders though before we get into these financial statements. The numbers financials we're about to look at are management's financial statements. Management is responsible for ensuring that they are complete and accurate, that they conform with accounting standards, and that internal controls are in place to support the accuracy of the financial statements. Those checks and balances and systems and processes that are being used need to be sufficient to ensure accurate financial statements. Our responsibility as your auditor is to perform an audit and to express an opinion on whether or not management's financial statements are accurate. So for us to do that, we first start by assessing the risk to the financial statements, what accounts, what balances, what transactions present the highest risk of there being an error or misstatement that we're going to have to address. And based on our assessment of that risk, we're going to then develop audit strategies to mitigate those risks. So that might include looking at supporting documentation, independent confirmation of accounts and balances, analytical procedures, a whole bunch of questions, and generally being a nuisance to Phil and the rest of the team with our inquiries. And all that evidence provides us the evidence we need to express an opinion on whether or not management's financial statements are accurate. So with all that said, at the very, very top of this letter, you will see our opinion, and it does state that we are issuing what we call a clean or unmodified opinion on the financial statement. That second paragraph that you can see right there. So that clean or unmodified opinion is the highest level of assurance our profession provides regarding the accuracy of the information you're about to look at. So that's my long-winded version of this is a clean audit. There's not a whole lot here that governance should be concerned about. Go ahead and then jumping to the financial statements themselves after the independent auditor report, which spans, I believe, if it's a little bit further down, we have what we call the management discussion and analysis. That's going to start on the following page. And the management discussion and analysis, one more page down if you could.
Sorry.
That's all right. It's simply a narrative that written by management to summarize the financial statement. So this is a really good way. It's 3 pages long. Just take a quick bite as to what you're seeing here in these financial statements this year, what trend lines, what activity you're seeing in 23 compared to prior years. I'm going to go ahead and move past that fairly quickly because we're going to actually look at the full financial statements. So if you head down a couple more pages here, we're going to get to the balance sheet. One more page down, I think. The balance sheet or the statement of net position for December 31, 2023, and the other prior year compare against as well. A couple highlights here. You see cash balances are down about $400,000. That was a strategic drawdown of cash. As you are all aware, the real estate market is a little soft here in calendar year 2023 compared to prior years, so that's not the least bit unexpected. Still a very healthy cash position. That's a very firm cash position for the organization. Down below that, you see under capital assets, 1, 2, 3, 4, fourth line down, the subtotal $1.7 million. That's the amount of resources that ESS has invested in its infrastructure, most notably that it's internally developed software. That's another $400,000 increase over the prior year of resources invested into those systems. Depreciation draws that down a bit. Net investment in capital assets just north of $1 million, about $250,000 increase from the prior period. Total assets then just shy of a $3 million, shade down from the prior period. That's driven by that cash usage again. On the liability side, very, very, very stable. Not a whole lot of movement there. $260,000 in liabilities, and that leaves us with our net position of about $2.6 million. Down about $100,000 from the prior period. That net position is split between unrestricted resources and those net investments in capital assets. The intent there is to recognize that the fact that those net investments are illiquid, you don't have access to them, at least not readily. So $1 million of that net position not readily liquid. Going on to the next page, we have the income statement in short. Total revenues this year, $33.9 million compared to $41.5 in the prior year. Of course, those recording fees went down this past calendar year because of the conditions in the real estate market. So that's a reduction of $6.3 million in recording fees. The disbursements, of course, are offsetting that. So down below, you have the expenses. Disbursements also down $6.3 million. Total expenses during the year, just north of $34 million, which puts us at a change in net position, a deficit of about $90,000. I should pause here and note, I should have led with this. As a reminder, these financial statements do not include the net resources within the electronic transaction fund that's held by the state. So if we go back up, the fourth line item you see on this page, also here, the third line item on the balance sheet is the amount due from that state fund, electronic transaction fund, for amounts remitted to the state for reimbursement. And then on the next page down, you'll see the revenue associated with those remittances, draws from the electronic transaction fund. That's the fourth line item there, about $500,000. That also is down over the prior period, in part because there's less activity in that fund with the condition of the current market. But that is how that fund kind of runs into these financial statements. It's not incorporated entirely in but you can see the cash events and the remittances requested from ESS to the fund through these financials. One last financial statement here, then we have a couple pages worth of disclosures we'll talk about briefly as well. This is the cash flow statement, and its intent here is to tell the reader how cash is being used and generated by the organization. I'll point you to that first subtotal, net cash provided by operating activities. So this is the core day-to-day operations of ESS. Is it generating cash? Is it using cash? That's a really important question when evaluating the economic solvency of an organization. You can see here both years positive cash positions from the day-to-day operations of the organization. 2022, of course, much firmer cash position. That has a lot to do with the conditions of the market at the time, but still positive cash position in the current year. So the use of resources didn't come from operations in calendar year 2023. It came from the investment in your infrastructure. So $420,000, you can see there right below that second header, is those resources that ESS used as an investment in software and technology in the current year. And that's why you're seeing reduction in cash, not because operations weren't break even, but because we're making an investment in those future infrastructure needs. After the financial statements, we got a couple pages worth of note disclosure. I'll just point you to one page further down. This page in particular is useful in just reminding the reader of how ESS is structured and organized, the accounting model it's using, the corporate structure that is fundamental to the organization. I won't read it for you, but it is there. I want to reference the fact that it's there for your reference. Outside of that, frankly, there's not a whole lot of exciting disclosures here within your financial statements, though they're pretty brief. Instead, I will point you to the final page or two of the report. If you go just a little bit further down, here we go. Along with our opinion on the financial statements, as part of our audit procedures, we do spend a fair bit of time thinking about looking at the control environment, those checks and balances, the systems and processes that ESS uses in developing its financial statements. While we're not actually auditing the control environment, so we don't express an opinion on the controls, we do have to incorporate those controls in the work we do. It helps us develop better audit strategies, helps us better understand audit risk. So again, not an audit opinion, but we do spend quite a bit of time thinking about looking at those control structures. And during the course of that work, if we identify deficiencies or failures in controls, we have a responsibility to inform you about them. And we would inform you in this letter. So with all that said, it takes us several paragraphs of small single-spaced font to say all that. I'm happy to say that we do not have any deficiencies that we identified in the control environment or structures. You will not see any recommendations here. We did not identify any failures or deficiencies. That really covers the remarks I had for you this morning. Can I answer any questions from the group about the audit work we did, the opinion, the financial statements?
Any questions for Robert? Very thorough, as always, Robert. Thank you and your company. Anybody have questions or comments?
I do have a comment or two, but we'll wait for questions.
Okay, Phil, it doesn't look like. Go ahead, Phil.
Well, I guess one thing to me that the audit very clearly depicts is the change in the real estate market. So as we communicate with policymakers and stakeholders about, you know, the belt tightening that we've done and the need for maybe fee adjustments or other policy changes, this is clear evidence that, you know, things are different than they were. And we aren't just making it up. This is part of our audit report. And I think it's important to keep that in mind. When I look at that figure that Samantha just had up on the screen, the difference between $41 million in total revenues versus 33, or looking just at recording fees, the difference between 28 and 34 million. I mean, that is very tangible. The other thing that you know, I look to is that you know, we have done the belt tightening to go along with the decline in revenue. And one of the things that we have done is, as Robert mentioned, in terms of software development, but we have actually dipped into our reserve to help maintain operations. It's not something that we want or can do repeatedly, but recognizing this is a downturn in the economy and not, a permanent restructuring, we hope, we have done that. And our objective going forward, particularly as we prepare for the 2025 budget, is that position will improve. Another thing that is going to be different in the next cycle is that during the current year, we basically have either depreciated or written off the value of the capital equipment because we have moved basically our entire technical operation, except for our local devices, to the cloud. We don't own that equipment anymore, and it's not going to be an asset. It is going to be accounted for a little bit differently because, it is an ongoing activity, but it's not going to be counted as an asset anymore. So there are a few things that, as we look forward, that are going to be different. But one of the things I think is very positive about the audit process is that it gives us an opportunity to sit down as a financial team, but also with our auditor to say, okay, here's what's coming ahead. And that relationship has been very, very constructive with Robert and his team. So those are the additional comments I would make. And we appreciate all the services that Robert and Denman and the team provide every year. Thank you. I
Thanks,
think
Phil.
you're muted, Robert.
I was just saying thank you, Phil. We have also enjoyed this relationship and appreciate the hard work that your team puts together to make this go smoothly for us.
Right. Thank you, Robert. And with no other further questions or comments, I would take a motion for approval of the 2023 audit report.
This is Sherry. I can move.
Thank you, Sherry. Do I have a second? Looks like Amy from the chat seconded. All in favor, say aye.
Aye.
Aye. Opposed, same sign. Motion carries. Thank you again, Robert. Now you can scurry off to your next meeting, right?
Yes, thank you so much. Take
Thank
care.
you very much.
I would just mention Robert's going to be at our full ESS meeting later this week too. So the full committee will receive a similar report. So thank you.
Yes.
Have a
Take
good
care.
day, Robert.
Great. Thank you, everyone. Thank you very much. And for those that just tuned in a little bit late, we did move Robert up right after the summary. We motioned or we approved the summary of the minutes from the last meeting. So now we're ready for the financial report. So we'll start with Lisa Long and the accounts receivable update.
Lisa, I think you might be on mute.
Thank you, because what I was saying was, so fabulous. So the largest amount on here is the $42,000 from Fund 255. We'll submit that invoice today, and we'll get those funds within the next couple of weeks. We do have a little bit of money outstanding from some counties for maintenance as well as deputies conference. So we continue to follow on those. And then Community Choice Credit Union, they had a failed payment and we're expecting a check on that this week. And Sam, can you confirm that we should get that check this week?
Community Choice, we actually received on Friday.
Oh, okay. Sorry.
That's okay.
We're in really good shape there. And I'm open to questions if anyone has them.
This is Nancy. Sam did email me. I mailed that check for mine, $46.35 on July 9.
Well,
Yes,
gonna-
the 42,000 we've actually received. We received it just a day late, so it didn't quite make this AR report.
Okay. Okay,
I was mentioning the Lee County 4635. I did mail that July 9. I'm not sure why you haven't gotten it yet.
okay, we'll take a
Okay.
look, Nancy.
Thank you.
Thanks. Anyone have any additional questions?
For the annual records management, system from some of the counties, is there a certain date that you want those by?
We always ask to have them mailed as soon as possible after the 1st of July, because that's when we receive the invoices from the service providers and we pay them because they're clearly looking for their money. There's a few stragglers. It happens every year.
Okay.
And so we'll get the funds in. Like, I know that we've received the funds from Dallas. Off the top of my head, I know we received that one. And Sam, can you speak to the other ones we've received? I know you're keeping more track of them than I am right now.
I think we only have 3 left. I don't have
Great.
the notes in front of me right now, but I think we only have 3 out of all of the maintenance fees.
Great.
Yeah,
Thank you.
you're welcome.
Any other questions for Lisa or the team about the receivables update? If not, we'll move on to the August summary of July ESS payments. Miss Samantha.
All right, accounts payable. I have several things highlighted here that you don't normally see. We did have the nationwide insurance bill come in for $1,240. We did also receive a corrected fiddler bill for the $22,049.65. We were able to communicate with Light Edge and they were able to get our billing corrected. So this is the normal amount that you'll see month to month. This $7,981.25 is what you'll see, hopefully going forward. And then you will see down at the bottom, the 3 credit memos for April, May, June, and July. So we are all caught up and up to date with them. They have their billing all fixed and we shouldn't have any other issues with Light Edge Solutions. The $2,000 here is for the preparation of the 2023 tax form for Denman and Company. And then the progression billing for the $4,600 is right below that. And that should be the final payment for the 2023 audit. Travelers insurance. This is an annual insurance payment for the $35,965. And then CIS, the 1-year subscription to the virtual machine. You won't see this on our reports and again until next year for the $7,875. We have a mileage reimbursement for a census who attended a meeting out of the office. And then we have the Tyler maintenance fees for $135,447.85. We have not received all of the maintenance invoices yet. I believe we're still waiting on COT Solutions and DevNet. Credit card report. I only highlighted the $31 down here for stamps. All the other credit card charges are charges that you see every month. I'd happy to answer any questions. Otherwise, I'd ask for your acceptance of approval of the payment reports.
Before you leave, I would like you to scroll back up to the accounts payable reports and just a couple of supplementary comments. One is that our cyber insurance and our other errors and omissions and other liability insurance actually went down a little bit this year, believe it or not. And our insurance broker primarily attributes that to 2 things. One is that the business community at large has gotten the message, and there are a lot more companies that are purchasing the insurance. So the pool of resources and the assets of the insurance companies is more comfortable, and they are charging a premium. I guess no pun intended there, but they are charging extra because of the additional risk. And the other thing that they attribute it to is that more and more companies are implementing better security standards, implementing two-factor authentication, and so generally the marketplace risk is perceived to be lower. So those are the two factors, and if you remember, a couple of years ago, our insurance premiums essentially doubled. So it's good to see it go in the right direction. I would characterize this as a more stable amount that we can plan and predict. The other comment I want to make is regarding the expenditure to computer integrated services, which basically that $7,875 is for the operating system for our Linux environment. And that is an expense that even though we don't carry the equipment, we do have a responsibility to pay for the software that operates on it. The cost of that software increased substantially this year, and we made a decision that we're only going to buy a 1-year license instead of 3. And so we are working with Kelly to identify alternatives that would put us in a more stable position with an alternative software for Linux environments. And the other thing that we're looking for is ways to leverage other software to do some of our security monitoring. So you'll see when I get the budget amendment that there's another change that goes along with this. So I'm anticipating that overall cost for this line item will be decreased next year. But we are where we are. So we did purchase a 1-year license for this existing operating software with the understanding that we would be making some changes. So those are the only extra comments I would make. Thank you.
Thank you, Phil. Any questions or comments from the group? If not, I would ask for a motion for approval of the August summary of the July ESS payments. Do I have a motion?
This is Mel. I can move to approve.
Thanks, Mel. Do I have a second? Looks like Susan seconded from the chat. All in favor, say aye. Aye.
Aye.
Opposed, same
Aye.
sign.
Mine was an approval aye. I was just late.
Thank you. That's okay. Thanks, Sherry. Motion carried. Thank you. We'll move on to the Fund 255 reimbursement invoice. Samantha.
This is the Fund 255 reimbursement invoice to the State Treasurer's Office. Our payroll is higher than what we have invoiced. We have an agreement with the State Treasurer's Office to bill for the prior month's income. It asks for your acceptance and approval to submit this to the State Treasurer's Office.
Any questions for Samantha? If not, I would take a motion for approval.
This is Mel. I can move to approve.
Thanks, Mel. Amy, would you go ahead and move that to a second? Are you okay with that? Thanks, Amy. All in favor, say aye.
Aye. Aye.
Aye. Opposed, same sign. Motion carries. We'll move on to the June quarterly and the year-to-date 2024 financial reports. Oh, well, yep, go ahead with the credit card stuff first.
Okay,
No.
this is our Bankers
Bankers
Trust.
Sorry.
It's okay. Beginning balance was $1,211,163.08 with an ending balance of $484.76. We were successfully able to reconcile this account. Here. We were also able to successfully reconcile the drawdown account. And the credit card statement, beginning balance of $2,040.48 with an ending balance of $1,771.32. We were able to successfully reconcile that account as well. Journal entries for June. We already covered the top few. I did want to note the DB2 expenses. We went ahead and moved that to the reserve account. So the journal entry highlighted for $10,432.84 was just to show you that we moved that to the reserve. And then July journal entries, the reimbursement of a test transaction in the for the point of sale, and then the depreciation expense that you normally see at the end of the month. And then the $7,875 was also moving an expense to the reserve account. All right, June profit and loss. We had the maintenance fees in June, so you'll see an extra income here of $184,241.82, with total budgeted income of $309,583.59. Revolving income for $2,941,591.42. Have the light edge solution overbilling for the 10,000 here. I just wanted to highlight that, as it normally will be about $4,000 less. And that will all catch up in July. Budgeted expenses of $121,862.48. With revolving expenses of $2,932,303.25, with net income of $159,585.28. Did prepare a budgeted profit and loss for you. Budgeted income of $309,583.59. Budgeted expenses of $121,862.48, with a net income of $187,721.11.
If you don't mind, I just want to interject before you leave that, we can't get too excited. That really isn't net income in the grand scheme of things, because we recognize income from the counties for the payment of the maintenance expenses, but the invoices from the service providers don't happen until July. So it looks like, wow, we've got great net income, but really that will wash out in the next set of financial reports. Thank you, Samantha.
Thank you. All right, second quarter for 2024 profit and loss. Again, we have that maintenance fee income highlighted here, with budgeted income of $585,821.44 and revolving income of $8,952,821.01. Budgeted expenses of $376,971.77. Again, I highlighted the data hosting from Light Edge. Reserve expenses. The depreciation expense we've highlighted here, which we started doing for 2024. Revolving expenses of $8,933,959.47. The computer equipment, we did take off the books in this quarter for $45,921.96, with a net income of $730.51. I did prepare a budgeted in profit and loss for the second quarter as well. with budgeted income of $585,821.44. And budgeted expenses of $376,971.77 with a net income of $208,849.67. Again, that income from the maintenance fees. And year to date, budgeted income of $952,515.95 with revolving income of $15,996,006.62. Budgeted expenses of $671,020.75 with revolving expenses of $15,986,421.41 with a net income of $36,239.81. And then again, a budgeted only profit and loss for year to date. Budgeted income of $952,515.95. With budgeted expenses of $671,020.75 with a net income of $281,495.20. Balance sheet as of June 30th. Total assets and liabilities equal $2,957,657.54. Fund 255 had an ending balance of $158,631.30. You'll see that the total receipts do equal what we billed for the prior month. We were successfully able to reconcile the Fund 255 account here. Profit and loss for the 255 account. In the balance sheet. I'd ask for your acceptance of and approval of the June 2024 financials.
That was a lot. Does anyone have any questions? It was a lot to take in. I realize that. Or Phil, do you have any other additional comments you'd like to make?
I think one of the things that kind of stands out for us in terms of having our adjustments. So, you know, the depreciation is an issue which sort of skews the financial reports to some extent because a couple years ago we had to change the way we were doing reporting and we're just treating certain things you know, as an expense, not as an asset. And when we changed to start counting the software we were developing as an asset, that moved out of the expense line into the asset line. So as we get sort of to the backside of a spurt of asset development or software development, then it starts showing up as an expense as the depreciation occurs, and it looks like, wow, we are really way overspending, but it really is just a matter of when does the depreciation go into effect, and eventually it all washes out. So that's sort of an asterisk in the P&L statement that we just need to continue to monitor and report on. And it looks even bigger now because to be honest with you, before Samantha came on board, we were behind in getting that depreciation reported. So you see a big chunk of depreciation being reported here when it really should have been spread over the financial reports on a monthly basis. So as we move forward, just keep that in the back of your mind that that is a factor that influences how the P&L reports. If the economy were good and we were kind of where we were a few years ago, you wouldn't even notice it. But because we have a tight budget and revenue is down, it is something that is more noticeable. But I would just say nothing to be seriously concerned about. So it's one of those things that as auditing standards change or they become more stringent, we are adjusting to those as we go forward. And this is just one of those adjustments. So, I mean, to me, that is a tricky part of looking at the financial reports. So, as we go forward, one thing I want you to be cognizant of is that we are including depreciation in the report, the overall report of budgeted income and revolving income with budget expenses and revolving expenses. The depreciation items are being included in those reports, as are the reserve expenses. So if you are looking for, okay, where's depreciation or where are the reserve expenses, they're going to be in the bigger report that includes both budgeted and revolving income and expenses. Then, as you look at the budgeted reports, we're not including that. We're just trying to keep a track of, are we staying on budget? Are we spending at levels that we agreed to as a part of the budget? And that's why you don't see those items in the budget report, because they're really there for a different purpose. So I want to make sure that the subcommittee and the full ESS committee understand that is how we are doing it, because it if you don't understand that, it should make you could wonder what in the heck is going on here. So we're trying to keep our focus on the things that we have control over in the budget and reporting on that, but we're being transparent about everything in the larger reports. And yes, there's a lot to look at, but that's what we should be doing. We should be reporting it on a monthly basis, and then in the months where we are having an ESS meeting, then we start looking at the quarterly and the year-to-date numbers just to see the big picture. So, boy, I hope that was helpful to you in some way, but it's something that you might want to look for as we go forward into future meetings.
Right. And I also appreciate all the work you guys have done with Light Edge to get that number, that 7,900, 7980, 125. So moving forward, that's what we can look for instead of, you having to go back and line by line and say we got charged too much or, that kind of thing. So we appreciate all the work you did on that as well. Any other questions or comments from the group?
I think Samantha did a great job explaining everything to us. That's been wonderful.
Yes. Okay, I would go ahead and take a motion for approval of the June and the second quarter and year-to-date 2024 financial reports as submitted. Do I have a motion?
This is Sherry. I can move.
Thank you, Sherry. Do I have a second?
It says Mel, I can second. Oh,
We'll take you, Mel. That's all right.
okay.
Yeah, we'll take Mel for the second. Okay. All in favor, say aye.
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 Aye. Opposed, same sign. Motion carries. Okay, now we'll go on to the budget amendment. I believe there was a memo as well on page 87 of your packet that Phil, I believe, is going to talk to us about.
You bet. And when Samantha, when you get there, you might want to expand it a little, just a little bit to make it a little bit easier to read, especially as we get to the budget spreadsheet. And I would recommend for those of you, for the subcommittee members, I would recommend you might want to keep the memo in front of you, and then Samantha, you go ahead and go to the spreadsheet, and I'll mostly be speaking from that. So you might want to, when you get there, you might want to make that a little bit larger so it's legible. I would go one more up.
There we go.
Yeah.
That looks
Okay.
good.
And hopefully you do have the PDF in front of you so you can look at that as well. So the convention, and there are other ways to do this, and I admit this is sort of the method that I've used to try and help explain everything. And I'm not saying that this is the best way to do it, but it helps clarify for me what do we do and what's changing. So the first thing is that as we progress through the fiscal year, um, budget becomes real, right? We know how much money we got, we know how much money we spent, and part of the budget amendment is to convert um, budget to actual numbers. So we last updated the budget in May, and basically what we were looking at is the period of January through April, but we did adjust the budget based on what we knew at the time, and we're fairly comfortable with, as particularly as we looked at bills in May. Well, now we have been through the month of July, and we've got a number of the August bills in our pocket, and we were able to go through and look at all those numbers. So everything from January through June is a conversion of a budget to an actual number. And I can say that, because we just gave you the June financial reports, those numbers are very solid because we reconciled the accounts, and that's what we're reporting. July is done, and we have most of those numbers, but they're not fully reconciled yet. So we're saying, okay, this is our best knowledge about what happened in July. We're essentially converting those numbers from budget to actual, but we're highlighting them in green just to reflect that those should still change because we haven't totally finished all of the financial reporting on that. Then everything that is in blue from August forward basically reflects the budget that was approved in May with the May amendment. So if it's in blue, you can have confidence that it's not really changed any from the last time you looked at the budget. But the things that uh, are noteworthy or which are changing, those are sort of highlighted in that magenta or pink, whatever you want to call it. That's really where the changes in the budget occur, and those are the things that I mostly want to highlight, and that is primarily what's reflected in the memo. So let's start with the revenue. We, at the beginning of the year, budgeted $7,000 for the Deputies Conference, which occurs in September. We have received some of the registration fees for that. We originally projected $7,000 in income. It's a budget. We don't know for sure, but we've recognized the fees or the registration fees that we've received so far, and we still have about $4,700 left in order to achieve that $7,000 budget target. So that number was originally in July. We moved it to August just to reflect. Actually, I think it was in August, but the numbers have changed. So we're keeping the overall budget at $7,000 in projected revenue. We're just making an adjustment in that amount. So it's not really a policy change or a budget change, but it is a change from the previous version that you've seen. Then the next one is the recording service fee. You'll see in our financial reports that and our trends report is that we did have a pretty good month in July. The July numbers were up in the submission, and we did not project this level of income. It's sort of okay, this is some positive news, because actually the June numbers were down year over year. So for whatever reason, whatever pent-up demand there was, it kind of spilled over into July. So that is a positive number. It's not a projection change. It actually is an actual number, but it merits highlighted. Then the next set of numbers that are different are those that are associated with the income that we receive from Fund 255, the $1 so-called e-commerce fee. In August, that number is an actual number, and it's 40,134.30. But generally speaking, we had estimated income of 42,000 plus. And if you look at the averages over the course of the first part of the year, because overall recording activity still remains down, I am recommending a downward adjustment in projected revenue. We're right on the margin of what this annual average is for the first months of the year, and we hope the remainder of the year is more positive than this, but trying to be somewhat conservative. I feel comfortable with the service fee, e-submission service fee numbers, because we did project that those numbers would go down later in the fiscal year. In the case of Fund 255, we were sort of sticking with an average number per month. And, I just don't think through the remainder of this year that we can justify keeping those original projections. So it's reduced by a couple $1,000, not a huge amount, but if you compare to the May amendment, we're down from where we were in revenue. All that said, we're still at $1.7 million in terms of our proposed revenue. That is down a little bit from the May amendment, but it's a number that we can budget from. We're not having to make any really difficult decisions keeping with that revenue. So that moves us then to the next page, which is the expenditures. And again, we're primarily looking at those items that are in that magenta or dark pink color, and I'll just walk through that right now. So the first line item that deserves noteworthy is bookkeeping CPA 990, and essentially that is a cost associated with Samantha's position. I have increased the October and the December numbers slightly because for the people who are using our benefit package, that is, are participating particularly in our health insurance plans, we are in the open enrollment period now. The benefit period begins in October, on October 1, and based on the information that we have, our healthcare insurance premium expenses are projected to go up by about 15%. So for the positions that are using the healthcare benefits, you'll see that I have bumped up those numbers a little bit to reflect additional expenses. Then as we go deeper into the agenda, I just want you to be aware that I've done the same thing for the account manager position for Lisa, done the same thing for census's position. So anybody that's in a full-time position, Myrna is also affected by this, that I have made those adjustments. Okay. The next line item is an adjustment in professional fees. And as you know, while we have census on board acting as a a policy coordinator and also performing some lobbying functions. We have maintained a relationship with the Rafferty Group to assist ESS with our lobbying activities. The last couple of years have been more of a maintenance monitoring activity, and because there is a more significant initiative going forward into the next legislative session relating to modernization and possibly an adjustment in fee income for Iowa Land Records ESS. I am recommending that we bump that amount up in the current year by $3,000 a month. And that is a reflection of just the more proactive activity in terms of our policy agenda leading up to the 2025 session. The way it works is we do an annual engagement with the Rafferty Group, and this would carry us through the end of the year. Bob Rafferty and Nick Lanning, who are the principal people serving us in this regard, sometime in October, November, they'll be submitting to us a proposed engagement for 2025. And there may be some upward adjustment compared to the current year for that as well. So I don't want anybody to be surprised by it, but it is a $12,000 increase under our 2024 budget. And that's because there is a lot of communication and prep work that needs to take place in addition to whatever census is able to do. And I have incorporated that in the budget. It is not an action item on your agenda because you're the finance subcommittee, but an amendment to the engagement agreement will be on the ESS agenda later when they meet. Moving on, the next item is you'll see an adjustment to $500 a month for the office tech support. You may recall that we entered into a new agreement with a new company, Iowa Solutions, to provide our office device technical support. Our experience with them has been good, and that experience suggests that we can reduce the budgeted amount for their services. So I have reduced that down to $500. I'm hoping that the expense actually stays less than that, but $500, that's about a $1,500 reduction compared to the current budget. Moving on, I'm looking at education and outreach. The education and outreach is a budget that we've pared down to almost nothing compared to prior years, just because it is a discretionary area that we can make cuts in more easily than in other places. But given where we are at, there are several things that are incorporated. So they are as follows. First of all, we do have a PRIA meeting coming up. It's their annual conference, and we have indicated to them that we're not going to be able to attend in person this year. So Lisa and I will be participating virtually. I am also participating in a panel presentation, and I will be giving that presentation virtually. But there is some money associated with registration for virtual participation, so that's been incorporated. In addition to that, there is a Iowa Housing Conference sponsored by the Iowa Finance Authority, where many of our stakeholders will be in attendance, and we're going to arrange to have Census there. Census is actually speaking at the event as well, and there's a possibility that we can have the registration fees waived, but I'm putting it in the budget. It's about $375,000, and there's a possibility that we may want to have Nick or Bob in attendance at that event as well. So I've added some money into the budget for that. Under software equipment and hosted, Kristen has been using a piece of software called Canva. She's been using it under her own license. Up to this point, she has asked if we could not create an account with the ESS for that software, and it's about $20 a month, and I have added that to the budget as well. That goes along with the software expenses for our MailChimp software and also our SurveyMonkey software. And then last but not least, in education and outreach, we're pretty much out of promotional items, pins and such to give away. And we want to be in a position to have that kind of stuff available. So Kristen asked for $1,500 in the budget so that we can sort of refresh our supply. And I have incorporated that into the budget. So that is a $1,500 expense that was not there before. That's probably the area where we're doing something sort of interesting. The rest of it is pretty much things that we really have to do. Before I leave this page, if I scroll down just a little bit further, Samantha, you'll see that again, for the policy coordinator and the account manager position, I have added some resources associated with benefit costs. And I've done the same thing for Myrna's position as you move to the next page. So go ahead and do that. All right, we're almost done, believe it or not. So the software for Amazon Web Services, I think Kelly's been doing a very good job of kind of keeping that under control. We had actually originally budgeted much more for this, but the amount for the Amazon Web Services, which we use for backup services, I have reduced that by a couple $100 a month, and hopefully will be less than that, but I believe that's a reasonably conservative number. I mentioned earlier when we were talking about the operating software, and if you could highlight the title called SUSE, Samantha, if you were able to do that. Okay, that is the operating software that I was referring to. It's the Linux operating software. And you'll notice that there is no money in the budget for that, and that's because we are paying for that out of the reserve fund. Associated with that, up above that, is an item called Nessus, Nessus. Okay, Nessus is a security evaluation monitoring type software that we have used for a number of years. Actually, we've used it since we went through the IRS security audit several years ago. Kelly has recommended that we not renew that software this year because it is potentially incorporated in the new operating system software that we may be using in 2025. So we think that we can save a little bit of money, and so we've taken that back out of the budget, and we'll reevaluate it as we prepare for 2025. And then last but not least, one thing I want to highlight for the subcommittee is that as we have made the transition to our new point of sale system with professional solutions, we have observed that our expenses are higher than expected. So the 8481.24 is highlighted not because of its change, but because it's higher than we originally projected. And we are in conversations with professional solutions right now to try and understand why our expenses are higher than they originally estimated for us. So I'm not raising any alarm bells at this point. We're in the midst of that discussion, but I want you to be aware that that is an area of, I won't say concern, but close attention. We're giving it very close attention. And Samantha's working on helping communicate with them to try and identify what the source of the increase. Why is it different than what we estimated? And we'll be asking them to make adjustments to match what we thought it was going to be as we go forward. But it is what it is right now. And so I'm just putting that issue out to you. And altogether, we estimated in the May amendment an ending balance of 6,459. And with the combination of changes that we have made, the projected net income for the year would be $15,000. So we're actually to the good by a small amount. We'll continue to have to watch everything closely, and we'll see how things play out. But I feel comfortable that we're going to be able to do these things as we go into the fall. And we have another quarterly meeting coming up in November. And if we need to make some further changes, we will at that time. So those are the highlights of the budget amendment. I would be glad to answer any questions you have.
Any questions for Phil and the team? Again, I think you did a great job explaining it. Anyone have questions or comments? If not, I would take a motion for the 2024 budget amendment as proposed. Susan made the motion. Do I have a second? Amy, second. All in favor, say aye.
Aye.
Aye. Melissa is abstaining. Opposed, same sign. Motion carries. Thank you very much. Now we'll move on to the ESS financial and strategic review. You want to start with the metrics, Phil?
Yeah, I would just point out that if you're looking at the blue line, the July numbers jumped slightly above where we were in 2022, which is a very good thing. You have to temper enthusiasm a little bit, recognizing that June was a very low number. So we'll continue to monitor that. And so I keep looking for positive news in the Wall Street Journal, and I'll keep doing that. But right now, it's still very much up in the air. We've seen mortgage interest rates decline a little bit, but the general sentiment is that the housing stock is still in very tight supply, and that's keeping prices up. So I think it's too soon to say that we're going to get a break here. We'll just have to keep watching it very closely. Otherwise, I have just two quick updates to share. One of them is the point of sale transition. I believe Alicia can jump in and correct me if I misstated anything, but all of the counties that were participating in the previous point of sale system have now been transitioned over to the new system. I think it's fair to say we did have some bumps in the road in terms of getting the right reports from professional solutions that cascaded into some delays in distribution of funds to the counties. But as far as I know, those issues have been essentially resolved. And now we're kind of down to, okay, what are these fees? Where are these extra fees coming from? Why is that happening? Lisa, do you have any additional comments you want to make about the move to the new POS system?
I agree with everything you said, and I appreciate everyone's patience as we worked through those bumps in the road. And we did add at least one new county to the system. That was Decatur County. They'd previously not had point of sale, and so they have joined, and I think everything's going smoothly with them. So appreciate everyone's patience, and we'll continue to work with Ahmed and the team over there to get everything figured out.
Thank you, Lisa. Any questions for me or Lisa?
More on this at ISAC next week.
All right. Okay, now if I may ask Samantha to stop sharing, because I have something I want to share real quick. So the last update I want to share with you today is that we are having this meeting today because we had two very important meetings last week. One of which was a meeting with a subcommittee of the Iowa State Bar Association real estate section. And then later that day, we had a meeting with the leadership of the Iowa Land Title Association. And we are, now that we almost have a final decision, and we're being optimistic and saying that, you know, the potential for the approval of a fee policy proposal seems to be improving. Not wanting to suggest that there's universal agreement about it, but it seems to be leaning in the positive direction. And we had promised the stakeholder groups back in June that we would be providing them with information about a fee proposal. And as some of you may recall, there were some bumps in the road that came up in that regard. And so we ended up saying to most of the stakeholder groups, hey, be patient with us. It's a process. We're working through those issues, and we'll get you information as soon as we can. Subsequent to that, the fee policy working group reconvened. We had a meeting up in Nevada, thanks to Stacy's hosting, and it was a very constructive, positive meeting. And there were changes made in the proposal compared to the one that was presented in June. Communications occurred with the districts through the district leadership and the leadership of the association, and generally the feedback was positive. So with that, we felt, we just could not wait until fall to communicate with the local stakeholder or the statewide stakeholder groups. And so in July, we took that information, we created a kind of a text version of what the fee proposal was, and we shared it with them. And then subsequent to that, when we went through the process of kind of converting that into something that was a little nicer, a little easier to read, a better communications tool. And this is what we came up with. And I will give credit to Kristen and Census for putting their heads together with coming up with this basically one sheet, 2-page flyer that can be shared with the stakeholder groups. And so this has also been shared, and we did share this information with the Bar Association and ILTA, but also the other stakeholder groups, recognizing that there could be some further edits. The meeting still has to take place. The official blessing has to be given. And, there are some ideas about how to word some things a little bit differently, but we did kind of go through an editing process with Nancy and Lisa Kent and Stacy and Megan to get to this point. And that doesn't mean we can't make further edits. We can, and no doubt we will. But this is kind of the base story that's being shared with the stakeholder groups. And I'll just speak for myself. I know other people might have their own ideas, but I believe that we're gaining traction, that the reception that we've received has been fairly positive. Nobody's jumping up and down saying, yes, we want a fee increase. But there is understanding, there's recognition that it's been 40 years. And I think that there is recognition that there are efforts being made to improve and to modernize. And because of that, none of the stakeholder groups have just come out and said, no way. They're saying, okay, yeah, let us think about this. Let us take it to our governing committees. Let's review this. Let's dig in a little bit more into the details. And so it's kind of happening differently depending on the stakeholder groups. It's not all sort of a one size fits all. We have to be flexible and have those conversations, but they are taking place. And so, I would say in terms of, from my perspective, wanting to be in a position in late summer with a plan and a general strategy in place and a lot of communication that has occurred before we even get to the 2025 session. We're about where we want to be. You should feel that you're about where you want to be. And so that's where we're at. So um, I anticipate there might be a few tweaks to this document in the next day or so, and then I think the leadership will distribute it to the full membership, and you can start using this locally. But we had to get something in front of the stakeholders because they were just wondering what in the heck are they doing. And now we've answered that question, and we're advancing to the next steps in the conversation. So I just wanted to share that with you to kind of make sure that you had a clear idea about what's going on, and process moves forward. Nancy's on, Stacy's on, others who have knowledge, feel free to comment, but that's just my take on things. Go ahead.
Sure, I can add that the Bar Association and the Land Title Association, they both really thanked us for giving them an opportunity to ask questions and, find out, just be a part of this instead of us saying, this is what we're going to do, and you don't have any input. So I thought it was a really, really good meeting for both of those groups last week. So yeah. Yeah, Nancy's saying she's in her board meeting, but she thought that both meetings were very good too as well. So any additional questions or comments from the group? Well, I appreciate everyone's time.
Yeah,
And
thanks for taking the extra time today.
right.
Appreciate it.
Yeah. Have a good week, everybody.
All
Thank
right.
you.
Thank
See you
you.
next week.
Yeah.
Bye.
See you next week.
Bye.
Bye.